Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, February 13th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. Just from a very short-term perspective here, we have a clear uptrend that's remained intact throughout the beginning of the year so far. However you want to draw this upper line up here, but for the most part, we've been trending up. At some point here, this channel may fail. If so, a failure here through 4100 or now through the lows here, 4050 here, could open up a return all the way back toward 3800 up ahead. We're bumping up against major resistance here, 4200, and overall, again, on this pullback here, bulls want to keep the PIMA trigger zone here, this bullish PIMA trigger zone bid for a shot at another rotation higher. At the moment, we do have a narrow range that had developed here previously. This narrow range, if this is a strong low here, we could be looking at a 200-point move in the opposite direction. So from 4060, if the move is to the upside, 4260 could be the upside target over the course of the current week, by the end of the week, or maybe into next Monday. If there's a failure to the downside instead, then we'd likely be measuring from a bit higher, perhaps the 4160. Down lower here to about 3960. So again, we could be looking at about a 200-point move up ahead. Overall, this market continues to hold at the 4200 level. Above 4200 could open up as high as 4300 up above. So keeping an eye on this trend to see, does it remain intact or do we start to fail here at some point sooner than later. Taking a look at the NQ, you can see here the NQ on a pullback right now, been trending higher overall, similar uptrending channel here that has developed overall, and for the most part we're on that pullback side right now, where if bulls can defend this zone, we could see a positive rotation to the upside. A failure here, call it 12.2, could open up a rotation all the way back toward 11K, the starting point of the year, and perhaps even lower. So big time zone right here. One thing that we're going to want to look out for here is Tuesday's inflation data. Tuesday, 1 hour prior to the RTH Open, we're going to get CPI data, and that could lead to a high range day tomorrow with some big time movement to come. And some of these days here that we've seen here in the past, the inflation data day, these are high range days. So we're going to get another one of those here coming up ahead. And it could be an outside day of some sort, but again, tomorrow could be the beginning of a high range move up ahead. If we take a look here at crude oil, you'll notice right now crude oil with a very clear trading range that has continued to develop here recently, testing the lower edge of the range at 72s with a big reversal back to the midpoint of the month. Right now, this thing continues to demonstrate a bullish trajectory to the upside with a shot to rotate into the 82 to 83 resistance zone. That's the top of the range here. This market has been range bound since November, and we could be looking at a retest here at the upper end of the range. Once price does get to this zone, though, again, there could be another rotation back within the range until proven otherwise. So further overall upside or uptrending flow here to the upside until proven otherwise for crude oil. We take a look here at gold futures. Gold right now on a pullback phase, found a strong high off the 1960 key level, but hasn't found a strong low and continues to pull back a bit. You see the 8-period average has rolled over tremendously, and we have this narrow 5-6 day range that's developing here. We could see a continuation back down. Are we going to get a retest at 1830? 1830 is the starting point of the year, the last 2 years, and so far that level's been bid, but after this strong rejection, we might see a round trip back toward 1830 ahead, especially given the lack of a strong low lately. Lastly, taking a look here at the YM. The YM has been range bound to begin the year. This is the first day of the year here. That's the break-even line. We've been mostly range-bound between these two extremes. And lately, to begin February, it's been even more significantly compressed. So we really haven't gone much of anywhere here in the YM. Right now, we're coming off the lows of Friday's lows here, which suggests that we may move higher within the range in the near term, back toward 34.2 or perhaps higher. But until we get out of this range, we're stuck for the meantime, and eventually a breakout from this narrow range could lead to a breakout from the broader 3+ month range here. This is now developing its 14th week of compression at these highs, and north of 5,000 points of movement could be seen ahead. Until then, we could be range bound, so look to avoid the chop until proven otherwise. All right, that is it for now. We'll see how this develops heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.